And welcome back to the channel, Mastering Options Trading. So, quick disclaimer, I'm not a SEBI registered analyst, so please consult your financial advisor before taking any of the trades. So, I brought to you a special video. I think being a trader as well as a trainer and a budding YouTuber, it's my responsibility to caution the traders at the right time. So, with respect to cautioning at the right time, so what I've done is every year I do the pre-budget analysis. So this year I'm making a video wherein you need to understand and be aware of certain facts, right? So let me walk you through the detailed analysis. So what happens is the gist of this video is basically before the budget and the budget week, it's going to be volatile. Since we have the budget on February 1st, so 10 days before it, and I would say 1 week before and after roughly, there would be kind of very wild moments in the market, and one needs to be very cautious. Both option buyers as well as option sellers are expected to be cautious. So let's have a quick look at the previous years, how market behaved 1 week, close to 1 week before and after the budget, right? So I've just taken the references as the lowest and the highest point somewhere around the current dates, which is 21st Jan today, right? And market is going to open on 23rd. So somewhere between 20th January to 2nd or 3rd February, what can happen in the market? If you observe carefully, 2017 is the year when the budget started on February 1st. Earlier, it used to be 28th or the 29th of February. Only from 2017, it started to be on the first day of February, which is February 1st. So if you observe carefully, the lowest and the highest points, I've noted it down for the past close to 8 years, or rather 7 years. So if you see, it's been quite a lot of movement between the low and the high, 4.4%, 3.4%. Similarly, there are years where it is more than 6 or 7% as well, right? So if you observe the dates as well, somewhere around 20th, 23rd, 25th, this is because there could be weekends and things like that. So that's why I have roughly considered around 20th of January um, as the reference data or reference date rather, right? So, and high is somewhere around 29th Jan or 1st of February. Generally, the highs or lows are formed. So we are in the exact same time now. So the movements can be somewhere around this range. So what I've done is I've basically taken an average of this, which comes around 5%. So A refers to assumption here. Assuming, so let's have a look at what is the closing price on 20th of Jan this year. So it is 21,572, right? So basically, considering, um, yeah, I think it's 21,542. So somewhere around 30 point of difference is there, but that should be fine. So basically, taking an average of 5%, what analysis I have come across is basically it can go as high as 22,619 also, assuming it's the lowest point that has been formed on Friday or rather Saturday, right? 21,542 is the low. So yeah. So if 21,542 on 20th January is the low, then the high, assuming the average of these 5% can go up to 22,600 as well. So that is the upper limit. And if assuming Friday or Saturday was the highest point, then 21,720 is the high on Saturday. Yes. So it can go up to 20,634. So basically, what I'm trying to say is assuming a 5% movement from the reference date of 20th January, Nifty can go up to 20,634 on the lower side, and Nifty can go up to 22,600 on the upside. So basically, for the next 10 or 12 days, or 6 to 8 trading days roughly, we can say that there is a range of 2,000 points on Nifty, which is close to a 10%. I'm taking 5% above and below, and the reference as 20th January. So this is the time when traders have to be extremely careful, both the buyers as well as the sellers. I mean, option buyers and option sellers. What are the factors that can happen in the next 10 days? Is first thing is you can see there will be increase in volatility, right? And then because of the volatility increase, there will be increase in the trading range. As we saw, it's 2,000 points, meaning 1,000 points above and 1,000 points below. That could be the roughly the trading range. That is our estimation, which is very high for the 6 to 8 trading days, right? Next one is with respect to implied volatility, which is one of the key reasons for the option premiums. The implied volatility will increase because there is uncertainty of the budget in the markets. Next one is because of heavies increasing, there will be an increase in option premiums as well. So, for example, if let's say 21,500 PE is currently at 120 rupees, for example, in some time, that is like 58 trading days, what would happen is the same strike, 21,500 PE, might be around 150, 160. It depends on how much is the India VIX rising and how much is the implied volatility rising. But the same option will be more costlier than what it is today, right? And the last point is it will be an increase in trading risk. Now, why do I say this is normally if you put a small stop loss here and there, the probability of hitting the stop loss, let's say, is X, but due to the increased volatility, till a few days after the budget starting from now, what would happen is because of the volatility, your SLs may get hit a lot more than expected. So that will increase your trading risk and that will actually hamper your risk to reward ratio. Because of the volatility, many times the SL can be hit. So in short, what I want to convey is this is seen over the years. I have actually analyzed for more than 10 years, to be honest. So, what happens is somewhere between 20th of Jan till 5th or 6th of February, there can be wild moments. So, everybody has to exhibit caution, right? I hope I have informed this on time and you would be taking care of your trading plans for the next few days. It's better to sit silent in case you're not okay with the volatility or don't want to experiment or take chances. In that case, it's better to sit on the sidelines, happily watch the budget, and then come back into the trading. Right? If you like this video, please do like, share, and subscribe. I'll be coming out with the analysis for Tuesday. Tomorrow evening, I'll release that video. Right? Okay. Thank you all.